2016 has been a year of surprises at the ballot box, and it may not be over quite yet. On Sunday night, a technical vote on Italian constitutional reform could see Prime Minister Renzi resign, the country's banks come under yet more pressure, and questions once again being asked about Italy's future in Europe. Whether it's a yes or a no vote in Sunday's referendum, all paths lead to the same place: fresh elections and more uncertainty. If, as the polls suggest, Italians do vote no, Renzi will likely step down and the president must then ask someone new to step in. The government have indicated this will happen fast in an effort to limit any potential market instability. In this case, watch the banks. Finance Minister Padoan has suggested that Renzi's pledge to tackle non-performing loans and recapitalise Monte dei Paschi Bank with the help of private investors could still go ahead even with a no vote. But will reluctant investors still want to take part? The banking sector is already down 48% this year. Now, whether it's a technocrat or someone from the current government, the next leader will also be tasked with completing the budget for 2017, finalising the electoral law, and preparing the country then for fresh elections next year. The critical point here is that if the yes vote wins and Renzi stays, the markets may breathe a sigh of relief, but I doubt the plan of action will change too much, even if the elections are pushed back to 2018. But that's not the only worry. The rise of populist and Eurosceptic parties here in Italy have investors worried that the five-star movement could form a government here in the future. They are calling for snap elections if Renzi resigns and have promised to hold a referendum on Euro membership. The key to remember here is that Italy's constitution does not allow referendums on international treaties, and current events prove how tough it is to change the constitution. What does this all ultimately mean? Well, the good news is that Italian CEOs and business leaders have told me numerous times in the last 5 years this country adopts a carry-on regardless attitude to political instability. I wonder if the same holds true today. The bad news is, in either scenario, whether it's yes or no, further economic reforms in Italy will take a back seat. And while any government change won't help investor confidence in the short term, I think it's fair to say that those calling for a bolder, more comprehensive solution to the banking sector woes will be saying exactly the same thing after this referendum as they were saying before, no matter who wins.